This presentation will overview the organizational dilemma of Safeway. It will explore and develop our scenario plan. This project began with a survey of capital allocation strategy for Safeway's board of directors. They ranged from adding more stores, buying back stock, and accumulating cash. Team Omega has landed on investing in store performance as the focus of our scenario planning, which is based on Cheromac's work. This will have the most impact on the mission of Safeway and reach the goals set forth by Team Omega. Goal 1, position Safeway in order to generate more earnings. Goal 2, generate greater value for shareholders. Team Omega consists of myself, Matthew Baxter, Team Project Leader, Coordinator, and Narrator. Ken Bateman has stepped up by becoming the remarkable person and subject matter expert, doing in-depth financial analysis of the organization. The remaining team members include Colin Bowen, team member and risk analyst, Summer Blankney, team member and SWOT analyst, and Wanique William Robinson, team member and organizational coordinator. Although team roles have been set, each individual is flexible in their contribution, filling in when necessary. The research agenda includes developing the organizational dilemma and using theory in order to plan our strategic goals. We have moved forward into conducting SWOT, risk, and financial analysis. Next on our agenda is to develop investment strategies that will positively impact the scenario outline, synthesize a plan to implement those recommendations, and assess said recommendations. Lastly, our team will analyze organizational effectiveness using the most successful scenario. We will follow the proposed agenda outlined here. We have reached the midpoint of the project and have successfully completed tasks up to this point. This is a flexible agenda that is subject to change. As a team, we added a follow-up and preparation meeting to discuss what we have done, how we can improve, and how we will move forward to the next part of the scenario project. Team Omega's SWOT analysis is as follows. Safeway's strengths are in its sales and other revenues. For example, in 2012, they were at $44.2 million. In 2011, they were at $43.6 million. In 2010, they were $41 million. Net income in 2012 was $598,000. In 2011, it was $518,000. In 2010, it was $590,000. Online grocery shopping is a relatively new service. Amazon is one of the first businesses to implement this service. Safeway was also a first to enter into online grocery shopping. Though online grocery is new, e-commerce is not a new concept and should be considered a strength and a positive opportunity for Safeway. Safeway's weaknesses include that it has a strong presence in the West Coast market of the United States. Though this is the company's niche market, they need to develop such a presence in other markets where they have multiple stores that have not capitalized on the market. This is due to the real estate investments that are a cash drain on the company. Safeway has begun selling unprofitable store locations, but needs to concentrate on making their stores more profitable. Safeway must recognize what works and what does not work for their company. Having a lot of stores does not mean that a business will be profitable. Safeway's business model needs to be refocused so the company can better understand what works for them and what does not. Safeway's opportunities include its private label brand development and focusing on healthy eating for overall healthy benefits, which are unique opportunities that may benefit the company. Safeway's threats include Walmart as a low-cost market leader due to its affordability. Safeway tends to maintain higher prices than its competitors and does not offer much room with price matching. If they continue to have higher prices than competitors, they must mitigate why they have the higher prices. Being neither a high-quality or low-cost leader, Safeway's business model is stuck in the middle, which is a shrinking segment of the current economy. In Team Omega's second assignment, two key team roles began to take shape and became distinct: project leader and remarkable person. Task assignments from the project leader were clearly identified and defined. And though Team Omega does not have an external project leader, the instructor serves as an effective external consultant, while the team navigates through its scenario planning assignment. During a conference call where all team members participated, a remarkable person revealed himself with knowledge of the business operations and diverse outlooks. As the team discussed scenario outcomes, his perspectives and prior knowledge presented the team with a unique opportunity to expand their thoughts and input towards the design scenario which parallels Chairmac's work. As a result of competing work priorities, communication between Team Omega's initial communication comprised only of email and individual telephone conversations. Logistically coordinating teleconferencing was delayed due to conflicting time zones compounded by competing work priorities, which had been highlighted in Kayworth and Linder's work. Team Omega is developing a cohesiveness and synergy despite conflicting work schedules and time zones. As a result, team members' participation and production are effective and significant for the current scenario project. However, meeting team deadlines has been an issue due to the pull of individuals' personal and professional schedules. The major forces listed pull and push the company in its strategic vision, impacting the scenario plan and eventually controlling the recommendations of Team Omega. The competitive marketplace is the food, grocery, and service industries. This market is ultra-competitive with low margins and high volatility. Investor pressure is the primary reason for conducting this analysis. As a result, this must be a major force on the board of directors. Currently, there are many private equity firms pushing Safeway towards a better allocation of capital. Team Omega's strategy is a direct response to these demands. Capital structure must maintain the ability to meet debt obligations and remain financially sound. Due to current Federal Reserve policy, debt is relatively inexpensive, but a highly leveraged company will result in less revenue for shareholders. The firm must keep strength with cash, guard against overexpanding, and ensure that current operations are liquid in order to keep employees, vendors, and financial institutions, among other stakeholders, confident in Safeway's ability to generate cash and pay back obligations. Ongoing projects such as construction and other initiatives that focus on the customer should be major forces competing for the attention of company executives. Ensuing stores are inviting and appealing is a major force in the success of the company. Maintaining store success may provide a better cash flow than investing in risky market expansion. Employee acquisition and training should be a focus of the company. Safeway must be committed to training and retraining employees to ensure that operations are conducted efficiently. When turnover occurs, focus needs to be on hiring employees that will benefit the company. A positive relationship with the United Food and Commercial Union needs to take priority. This union has the highest turnover rate of any trade union in America. Steps need to be taken in order to invest in employees that will retain employment for long periods so less cash can be spent on turnover. Team Omega's risk and scenario analysis assesses the following factors. An interpretation of our SWOT analysis was conducted by identifying internal and external factors that influence strengths, weaknesses, opportunities, and threats, which gave us a broad understanding of market trends. We reviewed industry reports to gain a better understanding of Safeway's market share, and in-depth evaluation of the recent quarterly earnings was assessed in order to understand the common sizing of financial statements. This was followed by analysis of key financial ratios. An in-depth study of technology integration and utilization was conducted, and an overall look into the strategic plan and how it complements Team Omega's recommendation was assessed. Lastly, a review of the competition and their strategies was also conducted. The assessment results included the following. Safeway is positioned in its market as a cash flow leader. They have grown slightly with their market share over the past 20 years. However, strong competitors are growing faster, such as Whole Foods and Walmart. The industry's major growth sector include healthy options and niche services. Although sales have increased, there has been an alarming drop in profits, leading back to our recommendation that Safeway's growth needs to be less of a focus. Honing in the profitability of current stores is a better investment. Some alternative growth areas to focus on include online ordering and delivering services. The following is the specific recommendations by Team Omega. In-store expansion and focus on store improvements. Increase individual store profitability over gross sales. Improve niche services and healthy options. This will have the most impact on the mission of Safeway and reach the goals set forth by Team Omega, which are: Goal 1, position Safeway in order to generate more earnings, and Goal 2, generate greater value for shareholders. Thank you. If you have further questions, please refer them to Team Leader and Coordinator Matthew Baxter. Here's a list of our references for review.